Hey everyone, it's Christian and welcome to another episode of Real Estate Weekly. Today we're going to talk about insurance and what kind of coverages do you need. Insurance is a boring subject. So I'm going to try to spice things up here in this video by sharing a real life example. This happened to us about 3 months ago, and I'm going to sort of walk you through the types of coverages that would prevent you from having to lose a lot of money, unfortunately. So this happened a few months ago. We were living in a downtown strata and we had a Niagara Falls event. And on the 10th floor, a water main burst and water was just gushing down. I mean, it was like being on the Titanic to a certain degree. Some floors had 3-4 inches of water, and you may even see a shot of it here in the video where just water is coming outside down. It looks like it's pouring outside. It isn't. It's a sunny day. It just happens to be a massive water event. So the amount of damage done to a building like this has been estimated in the millions of dollars. One of the contractors on site, I asked him and I asked somebody else, and they both told me over $1 million in damages. And not only to the building and, taking off drywall and replacing drywall and other parts of the building, damage to the elevators. It's also inside the units, right? You have homeowners and renters who are now not able to live in those homes, and they've had to go out to find other accommodation for the next 6 months. And so that's going to cost everybody a lot of money. So let's walk you through the 7 types of coverage. So the first type of coverage you want is strata deductible coverage. And what you are covered for here is if you are in a strata and let's say your washing machine breaks and it causes a flood down the next 4 stories below you, it could cause $200,000 worth of damage. Well, the strata has to pay a deductible, right? So they would pay the $75,000 and the rest of that is covered by their insurance. Well, that $75,000, the initial amount, they're going to come to you and they're going to ask you to pay for that. Because you're smart, you will have your own in deductible coverage. So your insurance will help you with that $75,000, right? That's the goal. The most important deductible is your water deductible. You can see an example here on the screen. In this insurance document, the water deductible is $75,000. That is probably the most important line item on any strata document, the insurance document that you get. Okay, and we always forward that to your insurance agent. So we want to make sure your deductibles are covered. If you did not have insurance, you could be responsible for covering all of that out of pocket. And I have seen that where owners have had to be forced to sell their home because they owed the strata $63,000. They didn't have insurance. So get insurance before you move in and make sure that's in place. Most stratas require it. I would say 9 out of 10 at this point. Okay, the second thing is going to be additional living expenses. So you can imagine in that earlier example with the building I'm telling you about, we've had to move 10 floors of people out and they have to stay out for 6 months because they have to pull off the drywall in their units. There's fans going 3, 4, 5 in a unit, 24 hours at a time. You cannot live inside the unit. And so if you're now having to go and rent a short-term rental for 6 months for $3,000 a month, that's $18,000 out of your pocket. So you want to make sure you're covered for additional living expenses. That's the second one. The third is loss of rental income. So you're an investor, maybe you owned a unit in the building that we were living in, and now your tenant has to move out for 6 months. Maybe they were paying you $3,000 a month. Well, you're still paying your mortgage, right? So your insurance coverage should cover you for loss of rental income. And when it comes to loss of rental income, you can decide with your insurance broker on how much you want to be covered for. You want to be covered for $25,000, $50,000? It's up to you. You discuss that with your broker, okay? The fourth would be personal property. Let's say you just went out and bought yourself a nice new black leather sofa. Maybe it cost you $3,000. On top of that, you bought a new Mac, maybe a new stereo system. Guess what? And it's all damaged because we had that Titanic event of the water coming through your home, and the 2 inches of water being on the floor before everything's taken care of. So now you've lost all that money. You want to make sure that your insurance covers your personal property. Fifth, betterments and improvements. So these are the renovations that you do to your home. So let's say you do a large scale renovation, you put in that $12,000 engineered hardwood floor. You can imagine it's not going to make it through that kind of an event. It's going to get damaged. It's going to be replaced. And whenever you're doing renovations, you've got to include that as part of your coverage, okay? So that you get covered for it. And then personal liability. This is separate from the actual event that we talked about. Personal liability would be if just someone came to your home and slipped on water, let's say in the bathroom, and fell and hurt themselves. Of course, they could sue you, and we wouldn't want that. So you would be covered that way if that's part of your coverage. And finally is just special assessments caused by external factors like an earthquake. An earthquake causes damage to common area. It could be the parkade that needs to be repaired. And of course, the Strata may say, guys, we don't have enough money in our CRF, our piggy bank. So we need everybody we're going to pass a levy. It's going to cost you, dear homeowner, $25,000 per suite. So you don't have that in the bank. Well, you can get that covered under special assessments coverage. So something to think about when you get your insurance. So I hope this has been helpful. If you have questions or comments, leave those below, and we'll see you next time.